Hey, welcome to the Closing Beat, everybody. Happy Tuesday. Yeah, got a weird week this week, actually, because the markets are closing early tomorrow and will be closed on Thursday, so we won't do a Closing Beat. We'll be back on Friday, of course, for the, well, we got to come back to tell you who won to guess the Dow, right? So we'll be back for that, of course. Welcome to the Closing Beat. This is just a quick show that we do. Go over the stock market, what happened today. Today will be a really fast one because not a whole lot happened today. If you look at the overall volume in the market, it was a lot lower than average, which is fine. Holiday shortened week. People probably leaving a little bit early. So kind of understandable. Had like a Christmas time kind of feel to it today, just a little back and forth. Okay, we're also playing that game, the Guess the Dow, I mentioned a second ago. You can go to that website there, take your guess if you'd like. No strings attached. If you win, we'll send you $100. If you're a customer of ours, we'll credit your account. Remember, the markets close early tomorrow, and they will be closed on Thursday for Independence Day. Hope you guys have a great, safe time with the fireworks and everything. So for the markets today, you got the Dow higher by a little bit more, S&P a little bit more, NASDAQ a little bit more. That puts you back to record highs, and a good chunk of that came right last second of the day there. The markets just kind of popped up and closed at highs. So it's all good news. I mean, nothing really to be frustrated about there. If we look at the overall S&P, you can see just a quarter point on the day. For the Dow, you got a quarter point on the day. Like I said, last little push there towards the end of the day, sort of helping that out. And the NASDAQ, same thing. Everything was uniform right there at the end of the day to close on the highs of the day. Volume was lower, like we said. There was just no economic news. You have the auto sales numbers that came out. There's really no earnings. The earnings season really starts July 15th there. So we'll cover that in a second, but just really not a lot to go on today. If you look at the Russell, that did lag behind again, but I'm not really so worried about it right now. We mentioned this yesterday. We're giving it a little bit of a break. It did a good little job there those 2 days, sort of blasting off for us and showing that it wasn't going to give up just yet. If you've been following along or you have small cap stocks in your portfolio, they're lagging. They sort of took a break after that first little exciting pop at the beginning of the year, and they really have been holding things back. So overall, you give it a little bit of a break there since it did have a good little run up, but we expect to see that start participating here with us, hopefully here very quickly when we come back from the break. When we come back from the break, the focus is going to be on earnings. So earnings so far, the beat on earnings is above average, meaning 63% of the S&P 500 has been on the last earnings cycle. Beat on earnings. That's above average. The average is about 59%. If you look at revenue, that is right at about average, but we're flirting with about a 2-year low there. So if revenues come in light here, we're going to need strong guidance to help sort of boost everything. We'll see where that lands. Everyone's going to be focused on revenue once again. Let's take a look at some of the individual sectors here, and then we'll take your questions as we maybe just do a short one today. I don't know. I don't got much to talk about. Oil was your weak spot of the day, down about 5%. It was sort of a brutal day for oil futures if you got to follow along there. Technical traders are going to say the 200-day moving average won. Fundamental traders are going to be talking about what's going on and start over with OPEC. Whatever you want to choose, know that oil was weaker on the day, and if you wanted that, that's a good thing. If you didn't want that and you're looking for a discount, that's a good thing too. So in the Dow, Chevron was naturally a lot of the energy stocks were just lower today. Oil-related stocks, oil drillers, oil service stocks, direct oil plays, they were all lower. In the Dow, you had Chevron as one of the worst performing in the Dow. I don't know how to say energy, oil stocks in the Dow. ExxonMobil as well, if we pull that one up, lost over 1% also. So just to point out kind of how things are going there. Elsewhere, we'll talk about the yield curve. I know you guys are interested in that. You had rates move back lower today in quite an aggressive way. So here's the price of the TLT we use just to sort of illustrate that. As the price moves higher, yields move lower. The yield curve between the 10-year and the 3-month had its biggest spread, meaning they sort of spread apart in the largest way that's happened since the beginning of the year. January 2nd, I believe you have to go to see that. And what I mean by that, I think I just said spread. I didn't mean that. The inversion is now 11 more basis points inverted, which is the largest drop in one day since January 2nd. I was ahead of myself on my comments there. So anyways, we are now at 29 days being inverted, the 10 versus the 3 months. And you had Fed speakers today. Remember yesterday we talked about that. You had 2 Fed members speaking today. Both of them said they're in no hurries to cut. And basically they said they'd need to see consistent data in the form of jobs and things like that to cut rates, which would lend you to believe that we won't see a series of those announcements until after July. So it gives you a little bit more of a hint that maybe they just won't be cutting in July. A lot of them are saying it's a little bit too soon there. We'll see. I sort of feel like they won't cut, but anything is possible. We'll see what happens. Your semiconductors pulled back a little bit today, and that's okay. It had a good run up there. You'd expect that to take a little bit of a break. I don't really have much of an issue with that. Maybe a little bit more of a pullback than you'd like to see, but that's all right there. You got gold. Nice day for gold miners. All of that there just starting to have a little bit of a bounce after pulling back there. So people still continuing to be excited about that. GDX is the gold mining ETF. If you want to follow along there as well, it had a 4% day. A lot of volatility in these two areas for an area that normally doesn't have a lot of volatility, if that helps you there. So near the top of the list, you got utilities. Had a good day today. Obviously, very strong uptrend. It was one of the leaders here for the first part of the year to take the markets to where they are. They were higher today because of that rate drop. And if you check REITs, whether you use whatever you use to check REITs, they had a good day as well. Remember, they sort of punished there at the last part of the month of June. And so just a little recovery rally there as well, also based on the rates. Remember, July is historically a strong month for the S&P 500. Average gain 3.36% over the last 20 years, if you look back there. So pretty much a strong month to be expected. And so far, not bad, right? We're off to a good start. We covered some of the stronger areas and the weaker areas sector-wise for the month of July. If you're interested in that, we covered that on Friday. If we look at the S&P 500, you got 75% of them above the 50-day moving average. Nothing changed since yesterday. It's the same exact number. Services in the lead, financials in second, tech and healthcare coming in fourth. You had 40 new 52-week highs today. And like I said, when I dig through these every day, I'll point out any sort of interesting things we see. AVY is probably the only interesting technical chart there. Hit new 52-week highs today, but a little extended in the short term. So if you play these pops, know that it's just a little extended there. It's a good example of one that if it fell for a couple days or went sideways like it did here before, it would be no problem. Same concept. Had a great move, great exciting bounce off lows, everybody's happy, and then there was really no selling, right? Just some short-term profit takers, but basically the stock went quiet. So to see that sort of go quiet there would actually be another good sign. You only had one new low. You had two new lows today, but Kroger stands out as one of them. Looks like it's headed back towards the $20 support area, which you go back on a weekly time period, you can check out. Nordstrom was not a 52-week low, but it was close, right? Did it hit? No, it didn't hit new 52-week lows, but came very, very close. This is the most heavily shorted stock in the S&P 500, and it looks like they're about ready to get another little bit of a breakdown there. If you're interested, Nordstrom is the most heavily shorted stock. There we go. The second most heavily shorted stock in the S&P is H&R Block. Kind of interesting, right? The stock's moving higher there. And the third one, you wouldn't guess it. I wouldn't have guessed it until we saw it. Under Armour. The stock's up over 40% this year, and it is the third most shorted stock in the S&P 500. That means that those people aren't very happy. Got a bunch of losing positions for those people that are short Under Armour. So I just thought that I'd point that out. All right, couple things in the news here. You got Roku. It was downgraded today. I think I put it in the scroller below. RBC Capital downgraded the stock, said, hey, it's a great stock. We don't have a problem with it. It just the risk to reward from here is no longer attractive. They downgraded it. The stock gapped lower to start the day, but finished the day higher by about 2% as people use that as a discount, I would believe. And then let's do a couple other things. Uber, we pointed this out yesterday. Uber and Lyft had a pretty nasty reversal day that normally you don't see that just reverse on the following day. You can see it tried today. It gapped higher trying to start the recovery, but selling pressure there. And Lyft took it a little bit harder. I believe it was down 2.5%. Same thing. It gapped higher today trying to reverse all that nastiness from yesterday and sort of broke down there. Also kind of fell under the the uptrend that you got going on there. So thought I'd point that out. Bitcoin came down to 10,000 here this morning, and it looks like you Bitcoin traders use that as support. Bitcoin did finish higher on the day. Electronic Arts price target raised at BMO. Apex Legends? I don't know. I don't follow that stuff. Apex Legends is sort of the optimism surrounding the upgrade there. Nike took away their shoe. I'm not going to get into that, but they put out a shoe. I guess they canceled it. They're not going to release it, or they pulled it back. Tesla is in the news here after hours. Apparently, they may have lost their CEO of Europe. That's not good, but they delivered a ton more cars than expected, I believe. So their numbers came out after hours. I know the number was higher. I didn't catch the actual number. It was like 95,000 versus 91,000 or something. And the stock shot higher and is still higher, sitting around 240-ish as we're talking here. So a strong day on tap for Tesla, or at least after hours, strong delivery, or strong performance. So that's that. As far as economic indicators tomorrow, you got the private employment numbers from ADP coming out. That's always like a precursor to the jobs number. That comes out tomorrow, and I believe job numbers will still come out on Friday because the market's open. You also have factory orders, which have been sort of getting a little attention lately, more so than normal. And where is this, the list? Yeah, dividends being paid out. The following stocks: General Dynamics, JP Morgan, Network Appliances, Bristol Myers, American Express, Cisco, the other Cisco, and Rheingold. If you happen to follow those, we own some of those in our portfolios there, so those are nice little paydays coming our way, and I will take the time to answer any questions you may have, so long as I can catch those questions. There we go. All right. Steven says, does Ameriprise Financial have any sort of general reputation? I'm not familiar. Are you just in general? Are they like good or bad? I haven't heard anything. I don't deal with them a lot. The times that I have dealt with them, I haven't had any problems. Now, granted, when I talk to other brokerage firms or other advisors, I'm usually calling to say, I'm taking your account. Sorry, do you have this customer? Can you send them our account? So those people are very nice there. I don't know about customer service or anything. Oh, cool. Thanks, George. Solar eclipse being streamed live. Man, you can see everything online these days. That's cool. Did I hear? I thought it was 14 sailors. Maybe it was 12. Yeah, the number's irrelevant. That's a sad story. Oh, you think it's an omen? I don't know. 2000, 2008. Tesla deliveries, thank you. 95,200 versus 91,000. So better than expected. Hence the little price gap that you're seeing after hours there. Nice. With all the Huawei buzz, what are your thoughts on Xilinx? I think most people tend to focus more on the sort of the headline names, like we talked about yesterday when that news came out. If you're just looking at a chart of Xilinx, it's not like super impressive here. It's following what the semiconductors are doing, but not in the same respects. A little bit, you would say, relative weakness there for Xilinx. They do have earnings. I think if you're going to see anything exciting, it's going to be around earnings there. As it gets closer, we'll pull up the data on that and sort of keep you posted. Yep. Why did the market rally with all the bad news? You never short a dull market. That is the sort of saying, I don't know, phrase, whatever. You never short a dull market, and today was a dull market. Simple as that. There's nothing to go on. No earnings. Econ numbers are all focused on one sector. That'll change, of course, but you never short a dull market, because if you short a dull market, you're sort of forcing that pressure to the upside. You're trying to fight against something that's just, not possible. Luigi, can you accept accounts of non-resident aliens? Sorry, that's not my rule. I wish I could. I wish I could go to Canada as well. I think I could go to Canada if I got registered there. I get a lot of questions from people in Canada. I would love to be able to open up shop there, but sorry, can't at the moment. Yahoo Finance data for S&P 500 goes back to 1960. NASDAQ, Dow Jones on 71.85. Where can you get them? You want the entire history of it? You probably have to buy it. You probably have to buy it from an exchange. Yeah, like all the data in the dojo and stuff. Unfortunately, you got to pay for that. It's like a movie control the producers of a movie or whatever. They control the rights to the movie. And so if you want to watch that movie, you got to pay something, or you got to go somewhere where somebody's paid for it. It's the same thing with the data. People that own the data or are willing to go and grab all that data, or even if you're going to buy it direct, it's technically theirs, and so they charge for it. It's not cheap either. It might be cheaper for you guys, but for quote financial professionals, they just charge a lot more. Miguel, will the rally continue this month? I don't know. Like, I can't say, obviously if I knew, I would bet a lot of money on it. I could say historically, July is a very positive month. We're going to cover that in our portfolio update as well for our customers. Like, what are all the stats on that? What are the odds of the market finishing higher or lower, the different markets as well? Something I do every month for them. Trying to do a dividend portfolio, investing a few hundred every week. Nice. With the markets at all-time highs, so just keep jumping in. My first thoughts are, well, if you're a dividend investor, your goal is to build this massive pile of money that returns some significant amount of dividends, right, over some time. So you really don't care about the price of the stock. You care that they're paying the dividend. So think of it that way. It would say if you're just getting started, you may want to focus more on growth, just to grow your money first, then start moving into dividends. So it wouldn't matter to you. There are going to be times where AT&T is underperforming, I think like now, and something else is overperforming. Your concept is just, I want the dividend. I'm in for the dividend. I don't think it's just going to be, you're not looking for some huge growth in an individual stock. Have you seen, talked about Tesla. They're 95,000. Thanks for posting that in there. You might have, Harry's got a point, maybe a little short squeeze after hours, at least to some of them. That might kick in a little bit more when the options market opens tomorrow. But that's what makes a market. What do you think about the upcoming earnings season? Are they going to set the bar low and jump over the past? So we covered that a minute ago, just the idea of earnings being a little bit above average right now, revenue flirting with the idea of making a new 2-year low. That's going to be the focus unless people are, the companies start guiding super high. I think that's going to be the focus. Remember, a lot of companies guided higher last year. More companies than not guided higher, even if they missed on earnings and revenue. If that sort of tone changes this month coming up, that could be an issue. Yep. Do we have any videos on a reverse split? Why? What? Why do they do it? I believe so. They may be in the dojo. I don't mean to like tease this or anything, but I think I did it for customers as a class. I don't think it's a public video because there was a time last year when there was a handful of them all in one shot. And I think I did the class just to update everybody because they were seeing like tons of little changes in their account. So I'm sorry. I think it is in there. It's a good idea. It's not one that I couldn't do publicly. I think I just did it because it was something that was happening at the time. By the time you good job. You can save $30,000 by the time you graduate. Wow. But you're gonna have $28,000 in student loans. I don't like student loans. I'm not one that says you have to live life with no debt. If you choose to have respectable debt, temporary debt, if you choose to get a 3% car loan because you can, and you're like, that's 3%. Do the math. It's like $70 a month on a $20,000 car, whatever, or $70 a year. If you choose that, then that's okay. I'm not going to beat you up for it. Student loans are a different story because if life starts to go a little sour and you can't pay those back, that is troublesome. So for me, I would consider just knocking it out, you know what I mean? Or at least starting to knock out a portion of it. That bothers me there. Yep. Some debt scares you, and some debt you're like, whatever, it's 3%, big deal. Can Boeing survive the bad news? They absolutely will survive the bad news. Yep, they will. Good job, Jack. I'm not getting into politics, but Mike's got a point there. You have a stock there. Let's take a look. I didn't look at that one today. I did see, I think it popped up on the big mover list. Yeah, because it did yeah. So look, these leveraged ETFs, by the way, these are one-day trades, especially the 3 times leveraged ETFs. Really understand what they cost. The performance on the chart is extremely misleading. So those are one-day trades. You buy that as a one-day hedge. a news-driven event hedge. You buy it as a day trade. You buy it as maybe a 2-day trade because you have some amazing directional bias. You do not invest in those. My opinion, I know I say I leave my opinion out, but that one is strictly my opinion on that one based on how they behave. Understand how those work. If you really feel strongly about, in particular, let's use this one. Let's just say you feel that strongly about oil, then consider putting on 3 times the size of a position notionally for the underlying instrument, in this case, oil. So why use the ETF if you could just go 3 times larger on whatever the product is that you want to use, oil, gold, something like that. I know the leveraged gold products are like that. Leveraged S&P products, same thing. If you think the market really is going to bounce, instead of using the leveraged ETF, just buy twice as much of the market. Save you a whole lot of hassle. Yep. Well, Jack, that may even further motivate you to pay that off. 8 to 11% on student loan debt. You may find yourself more excited. Keep working those summer side jobs there, that contracting thing that you're doing there. Keep working that. Maybe you put some of it, pay some of it off, and in a year you finish the rest out. Yeah, we covered Tesla for you. Exciting, huh? That's probably the most active thing after hours. It is the most active thing after hours. There you go. Perfect. All right, well, I think we covered it there. Sort of a shorter one today. Remember, tomorrow, unless something really whacked out happens in the market, we're not going to do the closing beat because it'll be like hours and hours later. The markets close early. And then, right, they do close early. Yeah, they close early. And then they're closed for the 4th of July. So we'll be back on Friday for you. We do have our normal daily video coming out. That'll be out at 1 o'clock, of course. And hey, I thank you guys for watching. Do all that stuff with the thumbs up, thumbs down, subscribe button. I appreciate it. And we will see you Friday. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.